Beijing's latest data on foreign trade is out for the first half of the year. Yang Liang has the details.
According to customs statistics, China's goods foreign trade volume in the first half of 2023 reached 20.1 trillion RMB, or about $2.8 trillion, marking the highest ever recorded for the same period in history. This represents a year-on-year increase of 2.1%. Notably, both imports and exports experienced positive growth, with second quarter figures surpassing those of the first quarter by 6%.
Private enterprises played a key role in China's foreign trade. Imports and exports from China's private enterprises increased by 8.9%, accounting for over half of the country's total.
Foreign trade with countries along the Belt and Road grew at faster rates of 9.8%, outpacing the overall trade growth by 7.7 percentage points. This accounted for over a third of the total foreign trade. There was also an increase in the proportion of electromechanical products in exports, and imports of commodities and consumer goods, including meat and aquatic products, also witnessed rapid growth.
Some major economies are experiencing high inflation, and geopolitics risks are still increasing. All these brought pressure to China's foreign trade development in the next half year. However, we still believe that China's economy is very resilient, with big potential development, and China's foreign trade is still very stable.
China says it remains committed to stimulating its economy, improving business environment and attracting foreign investment to stabilize its foreign trades and achieve high-quality economic development. Yang Shan, CGTN, Beijing.
Chinese stocks trading in Hong Kong and New York are rallying after a show of support from the sector from the very top. Chinese Premier Li met with senior tech execs in Beijing on Wednesday, while the country's cyberspace regulator said on Thursday would push for innovation in generative AI as it released updated rules. This is a signal to investors that there's a shift in the government's view of the tech world after a clampdown of nearly 3 years. Shares of Alibaba and JD and the overall Hang Seng Tech Index in Hong Kong all jumped this week. And for a close look at the Chinese economy, we're joined by Yan Liang, professor of economics at Willamette University, joining us from Guangzhou. Good to see you again, Professor. The last time we spoke, we talked about different ways for the Chinese to stimulate the economy because we did not see the growth that was as good as expected, I think is the best way to put it. But these latest figures on exports and imports, quite frankly, worry me. It should worry you, and I have to think it worries the officials in China that either more needs to be done or there needs to be more patience.
Right. Good to talk to you, Phil. So I think we look at the June number, the exports did fall by 12.4%, which, on a year-to-year basis, which seemed pretty significant. But let's not forget, last June in 2022, China recorded the third highest record of exports. So there is some sort of high base effect here that makes this June's number look less good. But in overall, I think you're right. When we look at the first half of this year, the exports has fell by about 2.8%, and import has fallen by 6.6% so far. So I think the sign here is that export demand remains to be weak, partly because of the high inflation and economic slow growth in the rest of the world, but also partly because of the United States and allies sort of reshoring efforts. So I think the key,
right,
of course, is to continue.
But Yan, to be fair, the rest of the world isn't in negative growth, right? So if they have zero growth or slow growth, we still should not be seeing these significantly negative numbers. And it makes me worry about what's happening in the rest of the world, right? Obviously, we're concerned about China, but exports from China is a direct relation to the orders that they're getting from, whether it's the U.S., Walmart, you name the company, right? There's a direct correlation there. Do we need to worry about U.S. and European consumer-based companies?
Right. I think there are signs that these economies are, entering this sort of very slow growth if it's not, recession kind of mode. So I think that if the weak demand, as I mentioned, is one of the factors for, why the export demand has been so weak. But at the same time, I think based on the most recent data, I think the United States probably will project a very small but positive growth. So I think we might be able to see some of the export demand to, rebound slightly, but that again complicated by the geopolitical risks. So it's not clear that we could continue to count on the exports. That said, when you look at the surplus for the first 6 months, it does reach over $400 billion, which is around 4.7% of GDP. So that means net exports is still not a drag on the Chinese economy, but we need to still pivot towards stimulating domestic demand, especially consumption demand, and I would say private investment demand in order to provide the extra demand boost.
By the way, you are in one of my favorite cities in China, because I've been there many times back when it was a sleepy city. Of course, now it's a metropolis. What is the mood like among business owners and people when you speak to your friends and family there in Guangzhou? Do they have a sort of wait-and-see attitude, or do they want the government to perhaps do more, at least in the short term, to stimulate the economy?
Right. I think the very interesting thing is, when you talk to different people in different sectors, they share different views. People who work in the construction sector, like my brother, he has a business in the construction business. He felt a little bit, I would say, hopeful, but at the same time, he's worried about the current situation. But when you talk to people who work in the service sector, their economy is doing quite well. So I think it really depends on which sector you're looking at. But I think all of them remain very resilient. They're also, like I said, very hopeful. They believe, when the economy is coming out from the coma of the COVID lockdown, things are starting to recover. But they do hope to see more government stimulus. And I also talked to some government officials working in the labor sector. They also think that the labor market is doing well, but they do want to have more, better employment services, better job creations, better, support to the local businesses in order to generate more jobs for the young people.
Yeah, it's interesting because we talk to people all over the world. Everyone has a different shade of the same problem, right? Create jobs, make lives better for people, and so on. Yan Liang, professor, really good to see you over there. Enjoy your trip. We'll see you back when you come back to this side. Thank you.
Thank you so much, Ian.